What's going on, YouTube? This is your boy TerrenceRe, back at you with another stock market update. We're gonna call this one, maybe going forward, give me a chart, and I'm just gonna go over some different charts, some different setups, and what I think about the week coming forward, coming up. Excuse me. What I got on the screen right now is BlackRock. I wanted to go over this story real quick, in case you've been hiding under a rock. BlackRock filed for, let's see if I can pull it up. I had it up somewhere. There we go. World's biggest asset management company, BlackRock, on Thursday filed for a spot Bitcoin ETF on Thursday, creating a ripple in the cryptocurrency space. The ETF would be named as iShares Bitcoin Trust. Its assets would consist primarily of Bitcoin held by Coinbase, which would serve as the custodian on behalf of trust. So now that's a couple things. We look at BlackRock. Now, if BlackRock gets this, all the other ones have been shut down to this point. So which makes you think like, well, especially with everything that's going on with Gary Gensler, you know, in my opinion, seeming like he got it out for cryptocurrency. Why would they do this? It is BlackRock. So, the way I look at it, I don't really care why, to be honest with you. I just care about the effect. Now, if they get it, now you can look for Bitcoin to move, right? Probably Bitcoin. I don't know about the rest of them, but Bitcoin in and of itself would move, I think. And let's see if we can pull up the Bitcoin futures. Just take a look at them. Let's take a look at them. And you can say even from they said they filed on Thursday, which would have been what, the 15th. So we got a green day, and then another green day. And so the futures isn't showing what's going on over the weekend on Saturday and Sunday, even though we know Bitcoin is moving over the weekend. It's going to be a ETF, and it's supposed to be a spot ETF. So it should be moving. So like basically it'll move like with Bitcoin, and you'll be able to buy, sell, trade it just like a stock, like buying and trading and selling the SPY or the QQQ or the diamonds or IWM. So me personally, that's what I would trade. I would probably trade that. And I would think that would make Coinbase move as well. And you can see, check this out. So we go look at what's that? That's Thursday. So if we're looking at this may not be a bad place to trade Coinbase because you got a little big green candle right here. Like it may be establishing a low, then you got a high and then a low. Let's see if we can take out this high, and you might be able to get long. Maybe long. I don't know if you want to get long shares. Let's see what I always want to see what the implied volatility look like. So let me drop in one of these other charts. It still got a low IV, which is crazy. It got an IV rank of 7. So with that being said, I don't know if you want to sell anything with this, right? So this one may be something better to just maybe buy a call spread or just buy shares. You can still sell a put. You're just not getting a whole bunch of bang for your buck in selling this put. But what I wanted to say is, so I would look for, and this week coming up, let's see if Coinbase take this high out right here. Coinbase may not be a bad play to the upside. Um, and especially if BlackRock gets it. If it's approved, I would look for Coinbase to really blast higher. Um, Bitcoin would probably blast higher. If they don't get it, Bitcoin will probably continue to slide. And as far as that, I just wanted to talk about that because I really do think that that I have some major for everyone that's a crypto maximalist or whatever you want to call them. This will help your case, because other than that, it looks pretty bleak. It looks pretty bleak if you really in the, especially Coinbase catching it, Binance catching it. Look like they trying to shut them down. I got a list of stocks that I want to go over with charts. I know this week we had they paused on the interest rate hikes, and like if you saw last week's video, I pulled up the probabilities of them pausing on the interest rate hikes. So it's not like we didn't expect that. We expected it because we went to the Fed watch tool, and it's basically giving you the probabilities. The market already had it factored in what they were going to do. And let's take a look at some of the stocks that I want to I looked at BlackRock, we looked at Coin. Let's go to AMD. Because like I said, I don't have, these are straight bullish setups. I don't care about what they saying on TV. I don't care about the perceived risk in the market. It's not showing in the charts. And so, you know me, my motto is trade what you see. If you see it, then trade it. No matter what they say. And whoever they is, no matter what I say or anybody else. This chart is up and to the right. So we looking right, and it's going up and making highs, high, low, higher, high, low, higher, high, low, high, low, high, high, high. Now that doesn't go to say, and it's going higher, and the volume is continuing to, let's pull the volume up. It's going higher on high volume. So it's not like it's not, we don't have any bear, the chart isn't screaming bearish, right? It's screaming bullish. No matter what's being said, no matter what they're saying, pull the chart up and look at it. Look what it's doing. And at this moment, now does that mean that it can't change? It can change. We would have to get some type of news or some type of catalyst to stop this from going up. We may have some pullbacks. Like you can see right here, it's hitting some resistance and chopping. But so it's not like I can't see it coming down and AMD drifting down some and pulling back a little, right? But ultimately, I do see it to continue higher. Like even if I pull up, you know, I pull up some moving averages. You can see right here the MACD has turned over on the histogram, right? But you can see the moving averages are still above the zero line. So it's still in a bullish trend. And that's how I pretty much gauge bullish and bearish. It's above the 200. Now I use a 200 exponential instead of a simple average. The standard is normally the 200 simple average, what they talk about when it's above the 200. But I like the exponential because it kind of moves a little more. And you can see it's above it. So any trade. Now I do have some bearish signals as far as like, and you say, well, what do you mean by signals? Right. You don't want to, if you are going to short, if you are going to short, I do think you can short like quickly, right? Not taking a long-term bearish position, but when something is stretched that way, you can catch a trade to the downside, right? I could see it moving down like from 120, maybe coming down to 110. That's $10. But you need to be in and out. Like if you sold a call, you sold a call and then or did bought a put spread. I don't like buying puts up high like this because you're gonna need a big move, and I just don't know if you're gonna get a big move in a small enough amount of time. These are bullish charts. So with AMD, excuse me, even with it pulling back a little bit, which I do, it can pull back into here. To me, that's a buying opportunity. They could pull back into here, and you can really build a position in AMD if you haven't started already, buying more shares, buying into it, or selling a put spread into it, or selling a put, even buying a call spread. The IV rank is super low, so it's kind of, you're not even getting a whole lot to sell premium, which also with IV rank going is so low. That means it's not even volatility isn't even being priced into the options, which is another thing for me, like, why I just don't want to be short, right? Let's take a look at Tesla. Now, ultimately, I got AMD. Honestly, I got AMD going up over the course of this year. I got it continuing to go up. I could be wrong, right? But I do got it continuing. The next target for me is right up around 140. 140 is the next stop for me on AMD. Let's take a look at Tesla. I don't have it already. I didn't pull it up already today. Let's look at Tesla. Now, move that. Tesla, we got it just hit. Now, I made a post and then I had put it on Instagram too. Will a Tesla make it to 300? That's where I got it heading. Tesla cleared, like, breaking out of this range, out of this little channel right here. You can see it had a channel. And last week's video I did, I think it was like right here at 261, right? And then so you could see chopped here, gapped up, pulled back, and look, took out this high. So what is Tesla gonna do? I think it's marching. You ask me, it's held up right here because we got a gap. See this gap? When we look left, let me draw this on here. I draw it right here. If you look left, you come back and you can see where it gapped down. So now here we are. If we look at it, right there. That's why it's holding up. I think that once it clears this gap, like it'll chop around in here. Once it gets out of this little area right here, I do believe Tesla's going to 300. That's the next stop, in my opinion, right? Based on my technical analysis, I got Tesla going to 300. What's the next? We want to take a look at NVIDIA. Look at NVIDIA. This is ridiculous. So I got NVIDIA continuing to go higher. I got some intraday stuff on here. So I'm messing around. But I actually charted NVIDIA on a weekly. You look at it on a weekly. Look at it. Momentum wise, this is crazy. It's straight parabolic. Now, when you look down at the bottom of the screen, you look at the MACD, right? You can see this MACD down here. Look at the momentum on it. You see how the histogram is continuing to make highs on the histogram, and this area of the histogram is higher than this area and this one back here on this high. So that means that the momentum is increasing. Not only is it accelerating, but it's the momentum and it's accelerating higher, right? So on the so it's continuing to go up. And this is a weekly chart. We drop it down and go to the daily. Look at it. Same thing, right? Now on the daily, we do have like the it's starting to decelerate right here. So you could get a little, we might be able to get a little pullback. I still wouldn't trade it though. So you see where I'm putting a trend line on it's decelerating, right? And then if we draw another trend line here, you got something like so, right? So we got that. We got high, higher high, and then we got deceleration. Now this is on a daily. So you could get a little chop next week, possibly. But me personally, I just don't want to short right here. I wouldn't be surprised if it came down some and you got a big hole right here, a big gap. So you could see it coming down. That's 100, like from what, that 320 to what, 365. It's about $35. But the overall thesis on the video hasn't changed. It's still the AI leader. So me personally, I don't wanna short this. I just don't want to take that chance. I do think it can still get up here to around 478. before I see it to really give us a big down move. But this week, it wouldn't surprise me to see it pull back just a little bit, a few bucks. Let's take a look at the diamonds, which is the ETF of the Dow. And if you look at that, look at it breaking out at you got this little chop level here, and look at it. I do think that now I do own the diamonds. I own it. I say it all the time. It pays a monthly dividend, and so this is something that I currently own. I own the shares in. So you see it right here. Look like it's getting ready to break out of this range. I have no intentions of selling it. Um, I actually think it can take out the highs right here. So if I have this charted on the diamonds, right? Think about it. It's 30 stocks that make this up. So, I obviously I'm thinking that these stocks are going to continue higher as well, or at least the majority of them that would keep this ETF to continue higher. Same thing, like this bullish. I don't have any bearish setups, which is why I just look at Netflix. Look at this hole right here. See this big gap? I'm gonna go back to a naked chart so it's easier to see. Nothing on it. See this hole right here? Now, is Netflix gonna fill this hole? If it does, it got to get all the way up to around like 507, 506. It's at 431 right now. The next level on my fibs is right around 467. So I mean, I have no. Let's bring up the MACD just so we can see how the momentum look. Look at it. Look at this. I have no. Now it is turning over, so you could get a little pullback, but I just don't want to short that. I don't know if that's enough to get you paid. Now, if you own shares, now what I would probably do, let's say you own shares in Netflix. You got 100 shares, 200 shares, 300 shares. I probably would sell a call, right? Sell one call against your position. You could sell a call and collect a little premium. It does have an average rank of 29. It's a little higher than the normal, so you might get a little juice. Maybe something like, these are just some examples of some things that I would do. Not telling anybody to do it. I would 34 days come out in the monthly. Shoot, you could come out here. I like to stay around 24 days, right around 25 days. And you could even sell the 31, the 31 delta, or the 30 delta, 29 delta right here. Sell this call. Was it the spread is a 30-cent spread, 990, 1020. Sell that call, take in about $1,000. There you go. You can collect $1,000 on that. And so something like that, and then as it gets higher, you'll see some of the premium come out. Get a little vol crush on the call side, and collect a little premium as it chops around. Don't try to, if you were to do something like that, I would not try to hold it and collect all of the $1,000, right? You don't want to keep that the whole 34 days. Be looking to burn that right around 20, 21 days, right? So if you take in $1,000 premium, and then you can take out maybe half of that, maybe, you taking $1,000, take out about $300, 30%. Take out about 30% in maybe a week or two, and move on, and then do it again, right? That's if you own shares. I don't know if I would be selling naked calls against a position that I do not own. When you do that, when you're selling calls against the positions that you already have open, all you're doing is you are capping your upside, and you're taking a little risk off. So instead of selling out of the position, you could take profit, or selling a call is just another way of maneuvering your deltas. So if you got, let's say you own 200 shares of Netflix, and then you sell 30 delta. So the 200 shares minus the 30 delta would mean that basically you're plus 170 deltas. Or if you owned 100 shares and you sold a call, that's basically, in essence, a cover call. So owning 100, selling a 30 delta, that means you're still positive 70 deltas. You reduce your risk, and then you're taking some off of the upside, and then you can profit on the downside and continue to hold the shares. So these are more nuanced plays of ways that I would handle, um, instead of just buying and holding. You see the market is outstretched and maybe you don't want to get rid of your shares. You can sell calls against those positions, right? Remember, my sweet spot, it just depends on how much risk you want to take, how close you want to be. Some people more comfortable going 35 delta. I like to do the way I stay. If you stay around 25, 30 delta, keep it to where you don't have to manage, right? Like if I got a target of 467, right? And then I come out here and I sell the 24 delta, or I sell the 30 delta, right? Be exact, it's 29. And I collect this thousand right here, right? So I collect this $1,000 and I'm right here at the 29 delta, which is 475. So I expected to make it to 467, right? So I'm not expecting my call to get touched. That don't mean that it can't. I'm just saying, based on my analysis, I expect it to hit some type of resistance right there. So as it goes up, the value will bleed out of the option. You'll get a little volatility crush, and hopefully you can. That meaning that the value of these options will come down, and try to take $200-300 out, and then move on, and then replace it and put another one on. You play that game right there. That's almost, if you know how to work it, that's like creating your own dividend, your own monthly dividend, if you can do so. The next stock I want to take a look at, we looked at Netflix. Let's take a look at the semiconductors. Right. Let's take a look at Taiwan Semiconductor. TSM, same thing. Look at this bull flag right here. We'll take these off. See that right there? See that? Got that nice flag. Tighten this up. We got a nice, just cleaning it up, making it look. I got my OCD kicking in. I like everything to be right and exact. So you can see right here, I got up, pull back, a couple candles with 1, 2, 3, then 4, then gapped up, bam. You can see right here where it came down, and we got this long wick. See this level right here at the 61.8? It held this support. So now if I pull up let's look at the MACD. We can look at the MACD right now. You can see right here on the acceleration, we do got a little divergence right here and then right here. So I can see it pulling back a little bit, maybe even pull back to 100 or something like that. That's only like that. Just to me, that this chart don't signal short. Me personally, I don't want to take no chances on short nothing. I'm looking at places and positions for me to get back long. So I get it pull down into here somewhere and see if it holds, and then try to get long, try to get a position long. Got a low IV rank, so you're not really getting a whole lot to sell options in here. So different ways of playing it. You want to get short, good luck. Just not in the market right now. I don't care what they say on TV. These charts are going they going up and to the right. I just don't have any faith in shorting anything. And I love the short stuff. Buying put spreads and stuff like that. I just don't see any opportunities that I think are worth taking. Now I do want to take a look at Target. Just because a buddy of mine is in this position, is in Target. Now, one of the things I see something, right? That ain't what I wanted to do. Now, I'm looking at this right here. And you can see it looks like this in the world of candlesticks, this looks like this is what we call a hammer. Like Thor's hammer. You got a little wick, and then and at the top it got a little small wick, and then you got a little body. And you can see, I'll show you guys a trick. If you want to learn candlesticks, this on the Thinkorswim platform, they have, it's been a while since I did it. Let's see if I can, I'm going to try to show you guys where you can go and look at candlesticks. I'm going to show you, not there. As soon as I figure it out. I think when you come up here on patterns, hit select patterns. Yeah, this is it. So, all right. You come up here on patterns, click, and then click select patterns. Now, do you see these ascending? Sometimes you see me doing stuff on here. You hear me talk about like expanding triangles and channels. Excuse me. You can add these to your chart and it'll show them on there for you. Now, they're not as good as I'm going to do them, but you can see them on here. But like a flag, like I always talk about a flag, right? You see flag. Let me click on this. I'm going to see if it come up. You see right there with a flag? It'll show you what a flag looks like, right? But I also look at, now it's showing you with a line, but I look at it with candlesticks. So that's just something that you can do. And if you go to candlestick, you click on candlestick, I can put in hammer, right? You see hammer? Now watch this. I'm going to click on the question mark. You see it? I don't know if I can make this bigger. So if you're looking at it on a phone, you may not be able to see it. But if you're watching this video on your screen and it tells you like hammer is a bullish trend reversal candlestick pattern, which is a candle of a specific shape. Now you see this, right? Right. Now look at this. Now, if you're looking at this and you at home watching this on your TV, I got hammer pulled up, right? Let's close this up. Look at this. It looked just like what was on that screen. So I just wouldn't be short right here. Now, that doesn't mean that it can't go down. You got this hammer candlestick. You got 1, 2, and gapped up 3. So maybe that could be the end of it, right? It came up off of these lows and shot up here. And now we got this big red candle that overtook the body of the green candle. So we could get some more continued down action. I just, with the way the market is looking, and also I seen this right when before I went to doing that, I got a crossover right here on the MACD. Now, it still is lower and the momentum is to the downside. So it can continue going down. I just don't like shorting into the hole, and this is what we would call shorting into the hole, meaning we already got a hole dug. So now we're going to get shorter in hopes that the market's going to continue to go down. And that's just, and they possibly can, but I just don't see it, right? I don't like, if anything, if I'm trading this and I'm bearish, if anything, I'm selling strangles or something, like maybe a skewed strangle. And even now I was skewed to be bullish, right? Selling strangles, if you want to do something, define risk, maybe an iron condor, you could sell a put spread, but this isn't something that I want to be short in. Me personally, I just don't know if we're gonna get a big enough move to the downside. For the most part, Target is a, like, in my opinion, just my humble opinion, it's a good company, right? It's not a zombie company. And one of the reasons that it may be going down is because, excuse me, one of the reasons that it may be going down is because of, the stuff that's going on. What you want to call it? I don't even know what to call it. You all know what's going on with Target. I don't even want to talk about it. Not on my show, right? We keep it. We all about the market. I could care less. But and let you look it up why you think Target going down. So that's that. That's that. I wouldn't be short this. I don't like shorting into the hole. Honestly, even though I know I told you guys, I said I don't think there are any short setups or any that I like. I have a scan that has put up plenty of short positions for me. Like, I got a scan that I have, a contrarian scan, and it's showing me some potential shorts. Like, this is up on Lululemon. I just clicked on it. I still don't. I wouldn't take this. Even though it came up on my scan, I ain't taking this. Look at it. Look up. That don't mean we won't get a little pullback. Now, with this scan though, these shorts that it's showing me, it is showing me stuff to get in and short and maybe be out within a week. This isn't something that I'm holding like to get a long short. This is something like you buy like a put spread, and let's say it hits some resistance right here and it pulls back to 370. You out of this trade. You on a, like when you're doing a put spread, you only need something. Let's just say, so for anybody, I do not go out there and take this trade. I'm just showing you this popped up on my scan, and this is the type of trade that I would take. And I may look at it just before, but I'm not putting this on. I'm just showing you something that I possibly would take and how I would trade something if I wanted to get short. All right, I'll give you a cheapie. This is a freebie. Come to the trade tab, right? Lululemon. If I was thinking about trading Lululemon, I want to be right around 30 days. So 34 is gonna fit me. Lululemon is not a good candidate. Just looking at the option chain, you say, well, why? You can't do this trade for cheap. They have $10 wide spreads in here. This is $10 wide from three. The box is $10 from $390 to $380. It's a no go. Let's see if we can find something else. QQQ might be a better one. Let's look at the QQQ, right? It's on here. Now, if I wanted to do the QQQ, which I don't, let me look at the RSI. I want to look at the RSI just to, let's see what the RSI look like. All right, okay. And the RSI is showing that it's overbought, right? That still don't mean nothing. It could chop around. You can see it's been overbought since it was right here. And it pulled back a little bit and then it jumped up. But this little move right here would have been enough to get you paid though. From 337 to 330, possibly. And you say, well, how is that? Because I'm going to show you a cheap trade in the QQQ that you could do. 34 days. I'm staying at 34 days, right around 30 days. And then I come right here. And this is what it's called. We're doing a put spread. And I was taught, the man that I learned it from calls it a in and out spread. So basically we're going to come here and buy the, oh, my mouse is glitching. Buy the 370, sell the 368. So what we did was we bought one, we came in the money and then sold one out. It's a $2 wide spread and we're paying 92 cents for it. Now the market is closed, so it would tighten up. If you look down here at the bottom, you see that it's either anywhere between 92 cents and $1. The market is open. This is going to be a tighter spread. So basically, you don't want to pay if it's a $2 wide spread, you don't want to be paying more than maybe $1.05, and you want to try to make $50 out of it. So you risking 100 to make 50, right? Now I know that sounds crazy. Like, why would I want to risk 2 to make 1? It's the probability of doing it. First of all, it's a 50-50 trade, right? And you say, well, it's a 50-50 trade. However, you're taking a trade when something is stretched all the way to the top side. If you look at it stretched and you want to get something short, I only need the market to come down. If you bought it here at 367, you only need it, to be honest, to get your $50 out of it. You need it to come down maybe to 358, 357. That's it. That's all you need. I can analyze this trade, and I don't want to make this video too long. I will analyze in and out spreads in the next video. I will come in on and just talk about doing in and out spreads. But let's say you guys take my word for it. In order from 367, we needed to get to let's just say we need about a $8 move, $9 move to 358, right? What's the probability of touch of the market making it to 358? You see 358? I'm gonna change this over here this delta to probability of touch. And let's look at 358. You see right there where it says 62% chance of just touching 358. So we're doing high probability trades, and we're taking a little less money off the table because you're not gonna try to make the whole buck. Keep in mind that the market goes up more than it goes down. So when you're shorting, in my opinion, you don't want to be, unless you're some type of professional hedge fund, you don't want to, it's hard to make a living shorting the market. You want to take your little pennies off. Now you saying hey, you're just making 50 bucks. Now you can do 10 of these if you want to. That's up to you. And try to make, uh, get your little $50 out of each trade, which that's 500 bucks. Do you get what I'm saying? We do for a pullback at some point, and this is how you trade those pullbacks without risking your whole t-shirt. And it teaches you a lot about options, just doing it in that manner. The next video, I'm gonna bring up the TastyTrade account. It's just easier when going to the trade tab and then modeling it out, and it gives you the probabilities and everything at the bottom. And I told you guys before, I like to use, sometimes I come on Thinkorswim. It's easier to do the charting on here, but you want to learn about options, you really need to be on the TastyTrade platform. And I do have a link in the show notes for you to open up an account with them, and that's that. And with that, guys, I know this video ran a little long, but hopefully you got something out of it. I went over some outlooks that I got for the week. Um, I went over some different charts, talked a little, went over a little some option concepts, which I wasn't really intending to do. Just kind of get on and just let it flow. And with that, guys, make sure you hit that like button. Make sure you hit the subscribe button. And with that, guys, I'm out. Peace.